If you are curious just how NMG is going to raise that $1 billion figure needed for the Meteorine mine and their bacon core anode facility, well then this video is made for you. Let's dig into it. The news report. Basically what we just got is just this, a project finance update. You see, NMG is trying to become the cool kid in class. They want to become the #1 anode producer in North America by 2025. But as you can imagine, that plan is expensive. More than $1 billion expensive to be exact. And that's money that NMG currently doesn't have. In fact, during March 2022, the company had just $43 million in cash. That is where this news report comes in. It gives us some more details regarding the how NMG is going to raise all that capital required. And one of those solutions is by going into debt. Actually, Western export credit agencies and governments show a lot of interest in Nouveau Monde Graphite. And these two types of lenders might actually fund up to 70% of the capital required for phase 2. Some of these export credit agencies are Euler Hermes Aktiengesellschaft and the Export Development of Canada. Moreover, NMG claims that through these medium-term project financings, they can acquire funding with a significantly lower cost of capital. Of course, through lower interest rates and longer repayment terms, which should help with minimizing the financial risk with this level of funding. Important to note that these expressions of interest or EOIs from these credit agencies aren't binding at all. Keep in mind, a lot of due diligence from these export credit agencies will need to be done before any funding goes through. But that is the first chunk of all the funding required for NMG's big plans. Debt. Now onto the next one. This one is called commercial engagement, but you can basically see it as offtake agreements. Thanks to NMG's phase 1 facilities, which are actually almost operational, the company can find meaningful customers and potential partners. The customers know what quality to expect, and therefore the phase 1 plans de-risk NMG significantly. All that testing, planning and producing of graphite should hopefully lead into offtake agreements. And these offtake agreements could be coupled with a strategic investor participation. This is what you and I as dum-dums would call dilution. So that is the second way that NMG hopes to acquire capital for their grand plans. Commercial engagement, which should lead into offtake agreements and potentially a strategic investment. But there is still one more, and there always is. Governmental support. NMG anticipates meaningful government support in the form of debt, equity and/or grants from both the Quebec and Canadian governments, and potentially even the US government might be included. So those are the three ways that NMG hopes to fund its phase 2 facilities. 70% through export credit agencies and the remaining 30% through governmental support and commercial engagement. It sounds like that a lot of the funding will be acquired through debt, which is, in my opinion, significantly better than a huge chunk of dilution. But don't you worry, a lot of dilution will still come towards this company. For now, we don't really know just how much dilution and how much debt is in the books. But to be fair to NMG, they probably still don't know that figure today either. The company and their potential funding partners will need to do significantly more research. And to help them in that research, NMG has asked Société Générale, which is an investment banker, to aid them in that process. According to NMG, Société Générale is a leading international financial services group, has very strong credentials in the metals and mining space, as well as the battery value chain. Société Générale will also assist NMG as a strategic advisor in the negotiation with a potential off-taker and an equity stake investor. And that was the main gist behind this article. Hopefully everything is clear, and if not, drop your questions down below. Now let's discuss what this means for Nouveau Monde Graphite. My opinions. First of all, I am actually liking this package. Sure, ladies and gentlemen, a lot of more dilution will come towards NMG. However, it does seem like they're looking at every venue possible to acquire capital. Hopefully, a significant chunk of all their funding required will be acquired through low-cost debt. I believe that is the best way to acquire capital for a startup like this one, as an investor. After all, if they would sell a significant amount of shares to acquire that same amount of cash, the position that you own as an investor in the company would become significantly smaller. That process is called dilution, and we do want to keep dilution as low as possible. So the package for sure seems interesting, but we will have to wait and see for all the details to determine just how good it actually is. For example, will the loans be fixed rate? Will it be flexible rate? Just how much equity will be a part of this deal? Those are all variables that actually matter. And for now, we just don't know. However, once this package gets finalized, that will be when NMG de-risks itself truly. This package is the main thing that's standing between NMG today and the NMG of 2025. This funding is the main reason why NMG is risky today. After all, we aren't sure if NMG is able to acquire that full $1 billion plus for phase 2. And even if they are, just how good will the terms be? Well, the finalization of this package will answer all those questions. That is it from my side today. Thank you so much for watching. I love you all. Peace.